All right, hello again, everybody. This is Mike Rixey. I'm the lead options instructor for NetPicks. And in this video, I want to show you how I have made a very significant change in my options trading. I've been trading since 2002, and over the past 15 years of that time, I've really been focused almost exclusively on a swing trading approach with options, meaning I'm looking to take positions anywhere from 24 hours on out to a few weeks. That's been my universe. But I think we can all agree that markets have changed. We have seen a very significant shift in how markets trade, how active they are, and I want to adjust along with those changes. What I'm not going to do is remain stubborn and just do what I've always done because that's what I'm comfortable with. As a trader, it's very important that we're open to change, to adapting to changing market conditions, because bottom line is we all want to make money. If there's a better way to make money, if there's a better way I can improve my consistency, I'm open to making those changes. So I want to walk you through some of the basics of what I'm looking for out of this approach. Now, when I say markets have changed, we've seen a perfect example of that just over the past few weeks. If you go back to the beginning of last week, everybody was talking about the markets potentially crashing, right? Everything's falling apart. The Fed has got to cut rates. They've got to come and save the day. We are seeing this type of a move to the downside. Really nice sell-off. During that stretch, look what volume did. Volume started to wake up. Look what the ATR, that's the average true range. Look at how the range exploded. We went from seeing an average daily range of around $4 on SPY to now we're up over $8. A very significant change. Markets are really starting to pick up. Volatility is picking up, and I don't see that changing anytime soon. Right? We have upcoming elections here in the US. Uncertainty with what the Fed is going to do with rates going forward. We have very mixed economic numbers coming out. A lot of that has not been priced in, not to mention all the potential for global conflict around the world. None of that has been priced in other than a brief little sell-off a couple of weeks ago. So with this type of an ATR, if I change this over to the VIX, take a look at volatility. We had volatility, look at the VIX, up above 65 here beginning of last week. Now it has since come back down, but this is just a preview of what can happen when volatility starts to pick up. Things change in a hurry. I point that out because when we were back in an ATR of 4, when the range was around 4 on a daily basis on SPY, that was really ideal for taking positions for a period of a few days on out to a few weeks. But now that things have really changed and we're seeing much better range, it opens the door to more of a day trading approach. And I want to walk you through what I've been doing with my day trading. A lot of the changes in the overall market environment can really be brought back to the explosion of the 0 DTE options. Options that expire at the end of every trading day. That have really changed how options trade for many markets. Even though those 0 DTE options are only available on a handful of markets, they really change how markets are trading throughout the day. And here's how I have been taking advantage of the movement. Let's go over to a 5-minute chart of SPY. The 5-minute chart is one that I really like for my day trading. With the 0 DTE options, the 3 markets that I have been looking at are SPY, which is the S&P 500 ETF, QQQ, which is the NASDAQ ETF, and IWM, which is the Russell 2000 ETF. 3 of the index ETFs that have options that expire Monday through Friday, every day. This gives us the opportunity to trade those very short-term options, options that move very, very quickly. Right? They can react very quickly to changes in stock price and can lead to some pretty powerful returns, allowing us to turn over our capital on a more frequent basis. Some of the individual stocks, we know the tech stocks have been very, very active. So Apple, Tesla, Netflix, NVDA, Microsoft, we can certainly trade those. But with a day trading approach, I tend to be more active with those individual stocks Wednesday through Friday. Because those stocks only have options that expire on Friday, right? The weekly cycle. They don't have the daily options as of this point. So by trading them Wednesday through Friday, now those Friday options start to act more closely to a daily option. So SPY is the one that I've been most active on here over the past few months. And I've got 3 setup types that I'm looking for. I've got 2 breakout type trades, and I look for 1 reversal. Now look what I did this morning. All right, we had our green setup right here. We have a trade calculator that looks for all of the criteria that we need for a setup. and it plots an entry and a stop dot on my chart in real time when that criteria is met. When you're day trading, very important to stay disciplined. You have to have a rule set in place that you can stay very disciplined to. Bottom line, those trades are going to move very, very quickly. And we also want to make sure that everything is very crystal clear on the chart for us. With markets moving so quickly, we can't sit there and hesitate. We've got to be able to put the positions on very quickly. Well, we had a bearish setup. We had our green dots right here. That setup was hit and was moving great to the downside. Didn't quite hit our target, and we ended up getting out at break even. Okay, no harm done. We move on to the next trade. And we then got a reversal, which was this blue dot, or these 3 blue dots right here. That gave us a long setup. We flipped around to the long side. When we're day trading, we have to be open to trades in both directions. Things can happen very, very quickly in both directions. So I can't fall into that perma bull or perma bear camp. I've got to be open to taking whatever the market is giving us. So I want to highlight this long trade because this is where we made the profit here earlier in the session. Once that entry point was hit, we came in and we bought the 553 calls. Those expired at the end of the day, right? So we only had a few hours for this stock to move in our favor. Thankfully, it did. We bought those options for $95 per contract. Because they're such short-term options, the nice part about buying these, they're very, very cheap in many cases. They're not tying up a ton of capital. You can certainly trade multiple contracts, not a problem at all. It's a very liquid market. Buying a long call, it gave me a very aggressive bullish position. I needed SPY to move to the upside, but thankfully it did. You can clearly see after some noise early in the session, we settled back in to another push to the upside. What is it? 7 or 8 days in a row now to the upside. Pretty phenomenal. So our call options increased in value. And once we're in the position, we manage that position based on the option price hitting a specific level. So I was looking for a 50% return on this position. That level was hit. We booked a $47 profit per contract. That's a 50% return in less than an hour. It was just under an hour for my holding time. So I'm in and out, not tying up a ton of my day. I'm able to put the position on in and out in just under an hour. And we close this one out just before lunch, right? So now I've got the rest of my day to get on to other things. I'm booking a 50% return with a fully risk-defined trade. The most I can lose in this position was $95 per contract. Right? Really great situation here. I've got unlimited profit potential with limited risk. That's why we all love to trade options. Now, some of you might be looking at that saying, well, it's only a $47 profit. Remember, I only tied up $95 to begin with. Right? I could have put this trade on 10 times with 10 contracts, tied up just under $1,000 per contract, and now I'm looking at $470 of profit in just under an hour. Pretty exciting stuff, right? A lot of flexibility here. If you're starting out with a small account, great. Very doable, less than $100 per contract. If you've got a bigger account, you can take this trade with 10, 20, 30, 40, 50 contracts. Not going to make a difference in getting fills on your orders. This is a very liquid marketplace. And bottom line is, whether you're trading an individual contract or 30 contracts, it's still a 50% return for us in under an hour with a fully risk-defined trade. This is why I love this approach. Now, if I were to pull up QQQ, IWM, the system remains the same. I'm still looking for the same criteria in our setups. It's really powerful to have that trade calculator in place because it really takes the stress out of the equation for me. I don't have to sit there and worry about pinpointing the exact entry point. It's done for me on the chart. Still up to me to come in and execute the trade. I've got to actually place the order with my broker, but that's the simple part, right? The hard lifting is being done for me. Now, the exciting part is what I'm showing you here on the chart, the calculator, the trade plans, how we're trading these positions each and every day, Monday through Friday. We are making this system available next week, and we'd love to have you join us for our live webinar. So there's going to be a link in the video description down below. Make sure you click on that link, reserve a spot for our live training here next week. We'd love to have you join us, and you can see here why I'm so excited about this approach. So I'm going to wrap this video up here. I'll be back with you guys shortly with our next walkthrough.